When we think about Asia, I think it's really important to think about how wide and diverse a region it is. There's variation in terms of settlement cycles. So on one hand, you've got Hong Kong, which is already at T+2, Japan and Singapore on T+3. Australia, on the other hand, has just moved to T+2. There's also variation in terms of levels of automation across markets. Some are very highly automated, and on the other hand, other markets are much more manual. That could be to do with stages of development of those different markets, but also cultural practices. In some markets, it's a recognised way of managing risk to manually eyeball trades as they go through. There's also variation in terms of efficiency standards. Trade date confirmation rates vary in the region. So some markets, for example, Japan is at 98%. Singapore tends to operate at 93% in terms of trade date confirmation rates. In emerging markets, however, there are often much lower rates of trade date confirmation. I think that's a real impediment and a concern when we think about the region's aspirations to be much more financially integrated. From an institutional perspective, for example, it's much more risky to think about investing into a market that has lower standards of operational efficiency. I think there are really three considerations to keep in mind. First of all, regulation. That's one of the biggest concerns that still remains uppermost in the minds of market participants in the Asia-Pacific region. Secondly, I think there's still a great opportunity for more harmonisation. So there's an opportunity to close the gap in terms of how we process cross-border trade versus domestic. I think there's also an opportunity to close the gap in terms of how we manage different asset classes, equities versus fixed income, and also across different markets. Thirdly, I think all eyes are on China. So not only is China increasingly influential in the region from an economic perspective, but I think anyone that's familiar with Stock Connect, for example, is aware of the complexities that exist in terms of reconciling what are very different market practices between China and the rest of the region. So when we're thinking about the future, there's really a few themes that I would look to. First of all, there's the ongoing economic development of the region. So we've seen a rise in trade in goods and services. We're also seeing a rise in financial integration, and that's being manifested in terms of mutual recognition schemes and the emphasis on passport programs, but also Stock Connect itself. We're also seeing a focus on counterparty transparency, and I think there's going to be a greater emphasis on operational analytics. On the buy side, they really want to have a better understanding in terms of their responsiveness of their brokers. Sell sides, in turn, want to have a better understanding in terms of what is the cost to serve different clients. I think increasingly there will be a focus on fintech. What are the newer technologies coming through today that can improve or replace existing practices? And I think blockchain is an example potentially of some of that at play. I think there'll be a rethinking in terms of the middle office. What common platforms can we use across processes, across the market to service operational needs? And also what opportunities are there for linking entity data, for example, between KYC and settlement instructions? Finally, I think there really needs to be an emphasis given to cybersecurity that's only going to increase.